episode 64 of
Mo Money,
the Investing Economics Show for Millennials by a Millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, the man of all hats for this show, MC Mo. Let's get to the money. This week, we're going to be talking about something that seems so simple, but at the same time, nobody ever really talks about. And that is, how often should I be checking my portfolio? The answer is probably a lot less frequently than you do. If you check it once a week, honestly, that could be too much. Once a day, way too much. Every couple hours, fucking forget about it. If you are checking your portfolio too frequently, it is going to drive you insane. And if you get anxiety easy, it'll probably make you sick. Your investments are not like plants. They do not need you to be there for them every day, watering them, talking to them in order for them to grow big and strong. Remember, I'm here to educate people on how to be investors over the long term. I'm talking making real money 15, 20, 30 years down the line. I'm not teaching you how to be a day trader. If you are taking my advice, there will never be a day when you go to sleep with a little bit of money and wake up and go, whoa, I'm so rich. Unless, of course, you end up in a coma and you wake up 30 years later and compound interest has worked its magic. Here are a few reasons why it's not a good idea to watch your investments on a frequent basis. First, like I said before, it will make you a nervous wreck, and that is bad for your health. A study done by Harvard Medical School found that the brain looks the same when on cocaine as it does when you're investing. Now, if you do cocaine all the time, every day, or if you're doing cocaine a couple times a week, it's safe to say that you have a problem. Another reason why is because you are going to lose money. I was going to say most likely, but it's a guarantee. Looking at your investments too frequently will cause you to do stupid things like selling your investments too quickly. This will cause you to incur higher taxes, and you'll miss out on gains by selling too soon. Also, you'll lose money the other way. If you see your investments down 4 to 5% in a few days, you'll panic sell and watch as it goes up 10% the next month. There is no good that can come from watching your investments every hour of every day. So how often should you look at your portfolio of investments? Sorry to disappoint you, but there's no proven or correct answer to this question. It varies. A safe and popular answer would be quarterly. Some say every 6 months to a year. Because remember, you are investing for the long term. So what happens in a day-to-day, a week-to-week, or even a couple months really is not that important. It's not a bad idea to check your stocks every quarter and hear the news on the company, but it's important not to panic if the company reports just a little bad news and not sell it if the company reports good news. Because when a company does well, it usually continues to do so. If you own ETFs that track indices like the Dow Jones, S&P 500, or foreign markets, etc., you honestly could check them once every year or every 3 years. Because remember, you're a long-term investor, so a one-year return does not really matter that much. Here's the bottom line. Like the famous saying goes, New York City was not built in a day, and neither will your investment gains. It is fun to look at your portfolio and see all your gains in your stocks, but the joy of those gains are no good if it deteriorates your mental health. Jesse Livermore, one of the greatest investors of all time, once said, "It was never my thinking that made the big money for me. It was always my sitting." And that guy was the founding father of modern investing, one of the OGs. So if you don't want to listen to me, listen to him. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook. Check out themomoneyshow.com.
Mo Money, signing out.